2,500 tax to be paid. Then having done that, let's see whether we have retained earnings or retained profit at the end of the day. If you add this, we have 55,570, and let's add this and let's see from this, you see that we have a retained profit, or we call it retained earnings. So that means at the end of the day, they have another extra earnings. Having distributed the net profit, then they have extra profit which is retained of 33,110. So that will go to the balance sheet because it increased the capital of a company. So that is that on the appropriation account. Then we go to balance sheet and prepare balance sheet as at that date. So this is the balance sheet. You can see that it's quite different from the sole trader. This one is a comprehensive one which involves so many items. The first thing here is that we first write the authorized capital. And don't forget that authorized share capital is what is included in the memorandum of association. You must state it that this is the share capital that is registered by the CAC and the CAMA under CAMA's Act. The company must state the authorized shareholder that they have at the end of the day, and that is they have a 300,000 authorized share capital. Then they have a preference share capital of 550,000. So that will not be added, but we just include it. They always include it in the financial statement to let the public know that this is the registered authorized capital. Now, we now go to out of the authorized capital, then they will now issued. This is where we are going, issued share capital. So they issued out of it, they issued ordinary share. Out of this 300,000, they issued 100,000 share capital, which is 100,000 naira, and that is 100 unit at 1 naira, which is 100,000. Then we have a preference share capital. Out of 50, they issued 300. So this is where we are going. We don't need to add this authorized profit. This is where we start our balance sheet. So the total share to the public, the total shareholder shares that they have is 1,300. We have 130,000. Sorry, so that is that. Then we have reserves, because a company must have reserves. So don't forget we have a general reserve which has been adjusted for here. We have a general reserve of 17,300, the one adjusted for and the one in the balance sheet. Then don't forget we have a share premium. That means premium they have when they were subscribing shares to the public, and we've done that in the issue of shares, which we do normally have when the share capital, issued capital is more than the nominal capital. We have a share premium, so it is additional profit on the side of the company. So then we have the retained earnings, which is 1310. That means out of what has been distributed. So if you add it together, we have 55,410. So if you are being told in the question that what is called equity capital, equity capital is the issued share capital plus reserve. So we add it together. This is what we call equity capital. So then let's now go to a long-term liability, which is the debenture. That means we have a 60% debenture, and debenture is a long-term liability. So that is a 34,000 naira. Then current liability are the liability that is due during only 1 year, just some month or a year, range between 3 months to a year. So that's what we call, we classify those items under current liability. And under it we have creditors. Creditors, in the trial balance we have 23,000. We have a salary owing. Salary owing, which is given in the additional information, and that is 250 naira. Then don't forget we have owing of a debenture interest owing, which is 700. Then we have a proposed dividend. And that is that of ordinary share. We have 5,000. Then that of ordinary share. That means this one is the proposed dividend that is given at the end of the year, so it is adjusted. Then we also have corporate tax. We have a corporate tax at the end of the day. So corporate tax. Do you know the reason why? Let's add it. We have 33,500. If we add it, we have 242,950. Do you know where we bring corporate tax into the current liability? Is that corporate tax is being paid a year that you realize the profit. You are not expected to pay tax on that year. For that year, you pay it in the previous year. So that is why you have to adjust for corporate tax as a liability, because it has to be paid. If you earn a profit this year, you have to pay it next year. So that is the rules under company income tax. So we have here we have land and building under fixed asset, and there is no depreciation on land and building, so we have 45,000. Then don't forget we have a motor vehicle. You have motor vehicle. The cost is in the trial balance is this, and don't forget the depreciation, which has been totaled as 8,800. So the value, the net book value will be 46,200 at the end of the day. Then we have equipment. Cost of equipment is 35,000. We have depreciation, which has been total provision, and that of current depreciation, which has been total as 5,350. We have 29,650. Then don't forget we also have current. We don't have any investment, but we have intangible assets. We have intangible assets here. Intangible asset here, which is a goodwill. So the value of our goodwill is 18,550. You know, it has been written off. Part of it has been written off. So we also have a current asset. Under it we have stocks, which is 30,000. We have debtors. That is 21,000. Don't forget we have a bank. That bank is 20,560. Then we have cash, which is 24,000 naira. So if you add it together, we have 103,560. So let's add the total. The total of this of fixed asset is 850. This is 14,100, and this is 135,000. Now let's add this and this together. You will see that we have 242,960. So that is, so we are balancing our balance line. If it does not balance, that means there is a mistake, or you did not post items where you need to post it. So that is that on the final account. Analysis or interpretation of account. You can also call it accounting ratio. Now, what is the accounting ratio? Accounting ratio are relationship between the figure expressed in ratio, which can be used by information user in a given financial statement. It can be used to interpret financial statement and also compare performance. You know, our accounting process, the stages of accounting is collecting, recording, interpreting, and a lot of things. So, as we are given financial statement, we need to interpret it. Doing with a lot of analysis, then we will be able to get the facts with computing figures together, calculations, so as to get the fact about the financial statement before we embark on any project or going to a business. So, and to also compare the performance. You want to know the performance of the company. You know, that is why we also have a 5 summary account. That means a company is able to prepare 5-year summary so as to compare the performance of last year to this current year and of that based year. So, with the help of accounting ratio, it helps us to know whether the company is performing woefully or they are performing very well in their dealings. So, we have different type of ratio where we can express, where we can do calculations and computation, which are, we have a profitability and efficiency ratio. Then we have a liquidity ratio and also investment ratio. These are the areas which we can compare the company ability or to know whether the company is expected to go on in the foreseeable future.